Charlie Gasparino, final thought to you. We've got about 3.5 minutes to go to the bell rings.
Maybe I can get the market back up.
Please.
Look, no, I think the point about higher interest rates is well taken, that you moderately higher interest rates is good, and it points to a growing economy. Where higher interest rates get nasty and where this can get out of control is if these tax cuts, again, like say it again, don't produce the type of growth that's needed. More than 3% is clearly something that needs to happen. And if that doesn't happen, you don't get a big bang for your buck in terms of corporate earnings, number one. But number two, you have a widening deficit. And when you have much wider deficits, you obviously have to sell more debt. To sell more debt, you have to put higher interest rates to attract investors. And and we're not just talking about modestly higher interest rates based on growth. We're talking about a spike. And that's some of the fears that's in the market. If we do have that, all bets are off here. I mean, then that's it for that could be it for the bull market, and we could, obviously, if you follow that doomsday scenario, it leads to an economic slowdown. I'm not saying it's going to happen. I think tax cuts actually pay for themselves, but there is that theory out there, and it's not held by lunatics. I mean, we're talking about David Stockman and a lot of other smart people. That's their doomsday scenario. Yeah. So I would just say, if you're an investor,
Well, David Stockman's, he's definitely got his thoughts about the doomsday. Yep. I'm glad you brought that up with regards to Stockman's. Real quick, I want to go to Charles Payne before we hit the bells here. Charles, all that concern about the economy and really about the Fed, is it overblown or no?
I think it's absolutely overblown. The last time we had a repatriation tax, George Bush, the fourth quarter of 2004. The first 3 quarters of 2005, the last 2 years, America grew more than 3%. 2004, 2005. Cisco last week said they're bringing back $67 billion. That's $250 billion with Apple. Already, we're seeing more money coming back. I'm pretty confident. Ride these waves out. Do what you have to do. But don't get shaken out. Don't get spooked out. 3% never crashed. 3% yield on a 10-year never crashed the stock market.
Jeff Reeves, I've got a minute and change to go. Final thoughts?
Yeah, I mean, I think everybody's talking the same story here. I think that there are ways where this does go sideways, but there's a whole lot of daylight between now and then. And so, if you are an investor, it's a cliche for a reason, take what the market gives you. I think we've seen buying opportunities in the past on pullbacks. I think this is one right now. Whether or not there's a long-term catalyst that's going to push everything down seriously or cause a recession, I mean, I don't live in those worlds of what ifs. I'm just going to take what the market gives me. And right now, I kind of like the valuation in a bunch of stocks. I think it's a stock picker's market. Pick some stocks here.
All right, final word to Phil Flynn. 10 seconds, Phil.
All is well. Buy the brakes. Buy the brakes. I think everything's going to be fine. You'll get through it.
That's a good way to have a final word, especially. We've been through this before. We've seen this story play out, folks. But yes, once again, the Dow, major sell-off after a 3-day weekend. The Dow down 259 points. 300-point swing, by the way, today during the session. 335 was our session low. We're off of that. Thank you, Charlie Gasparino.